morning and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director. Today we're going to start by looking at corporate earnings. Really important because it gives a lot of information to investors and they can assess whether companies are good investments for the future. So we'll be focusing on Q1 2020 results. Financial accounts gives us a lot of information about general corporate health, allows us to assess industry trends and get an assessment of the global economy. We'll focus on earnings and sales, and there's a lot of focus of whether earnings are higher than what analysts forecast as well as sales, but this is very much backwards looking, so we also have to look forwards, and therefore there's a lot of focus on what the company is saying, their CEOs in their statements that they make. Today we'll be focusing on some of the largest companies in the world, Tesla, Netflix and Procter and Gamble. They're large weightings within the stock markets. Starting with Netflix, they've catapulted onto our TV screens and really changed the way how we view content. They, whilst delivering on earnings, coming in higher than expected, they missed on sales. Interestingly, that the number of subscribers that they've added through the quarter was actually a negative. They lost 200,000 subscribers globally. Also, interestingly, that their expectations for the next quarter, the Q2, they're expecting to lose 2 million subscribers given the level of competition that are out there and consumers just pulling back on their spending. So as you would expect, yesterday their share price fell 35%, a big drop, but that was really a reflection of the valuation of Netflix rather than the sales, because investors had got used to the exceptional growth that the company has delivered in recent years and had been paying a very high premium for that stock. Procter and Gamble, more well known within utility and healthcare for products like Fairy and Head and Shoulders, they delivered record sales growth, their best in 2 decades. Interestingly, that they raised prices last year, but consumers are still willing to pay up for their products. Interestingly, that they're also trading up, meaning that they're willing to pay more for higher quality products because they believe they're getting better value. And then finally, Tesla, very well known within the electric vehicle space. They're seeing exceptional demand for their products, delivering on earnings better than forecast. They did caution that they are still facing production issues with supply chain issues, particularly in Shanghai and China, but still very strong growth, and they're expecting to deliver 50% growth rate this year on sales. That's equating to about 1.5 million new Tesla cars. So very strong from Tesla, and still the consumer demand is still there despite prices higher. Some supply chain issues, but still expecting those to improve throughout this year. In terms of global equities, mixed returns. US stocks were slightly weaker, but better performance again from UK stocks and European equities delivering well through technology and banking stocks. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.